Today I'm going to take you through forecasting. As you can see here, we have assumption and drives, income statement, balance sheet, cash flow, and supporting schedule for the year 2020, 2021, and 2022. So from this information, we will be able to do the forecasting for the next 3 years. We have a balance sheet check. This one will help us to know whether our balance sheet is balanced. Then we also have the check. This one is going to confirm whether the cash in cash flow statement is the same as the cash in balance sheet here. So let's get started. We are going to start with revenue. And revenue, from here we are seeing that revenue will be increasing by 6.9% for the next 3 years. So there we are going to have 1 plus that cell times the previous revenue, and we are going to get that value. When we fill right, we are going to get the revenue, the projected revenues for the next 3 years. Then we have the gross profit, which we are going to get by gross profit is a percentage of revenue. So just going to fill right to get the value. So for us to get the cost of goods sold, this is going to be just E34 minus the gross profit for you to get the cost of goods sold. We are going to fill that right. So the first part of the income statement is done. We are also going to do the one for the operating expenses. The depreciation and amortization from our assumptions and drivers is a percentage of revenue. So there we are going to have times the revenue, and we are going to fill that right. The same to general and administration. It is a percentage of revenue. We get that here. Get that there. Then we have the marketing and promotion. The marketing and promotion from our assumptions and driver, it is a fixed cost, so we are going to take it directly from our assumptions. Then we fill that right. Then the same we are going to do with the other operating expenses. Other operating expenses is also a percentage of revenue, and we are going to multiply that by the revenue. Fill that right. So to get the total operating expenses, we're going to use a shortcut of Alt equal and give us that. We fill that right, and we are going to have the projection for the total operating expenses for the next 3 years. Then now to get the EBIT, which is the earning before interest and taxes, we're just going to get the difference between gross profit and total operating expenses. So that is the operating profit in year 2023. Fill that right to get the forecast for the next 3 years. Then interest we are going to get interest from our assumptions and drives. Interest is going to be a percentage of average debt. We are going to multiply that by our average debt. Where are we going to get our average debt? Our average debt is here. Our average debt is that. So simply because our interest is the percentage of average debt, first we are going to find out how we can complete our debt. We come down there, then we go back up here. Long-term debt is going to be that for the next 3 years. So we fill that right and we get that value. So when we come back here, simply going to fill that right and get our interest. So income before taxes, you get the difference between operating profit minus interest. That is going to be E46. You fill that right and you get income before taxes. Then taxes is a percentage of income before taxes, which is that times E47. You get our taxes, projection of taxes for the next 3 years. Now to get the net income is simply going to be net income is going to be now income before taxes minus taxes, E48. So that is going to be our net income. So to complete the income statement, let's check the common dividends. The dividend ratio is going to be that as a percentage of net income times net income. So that is going to give us the forecast for the income statement. As you can see, we have been able to project the revenues for the next 3 years, the gross profit for the next 3 years, the total operating expenses for the next 3 years, earnings before interest and taxes for the next 3 years, and we have been able to get the projection of the net income for the next 3 years of this particular company. And given the dividend ratio, we are also able to get the common dividend for the next 3 years. Kindly follow for more.